South Africa halted discussions with the World Bank for a $4.5 billion emergency type loan to get our economy over the COVID hump. And that apparently, reportedly, stipulated that South Africa, that there would be no pay rises for civil servants.
South Africa is addicted to debt. The national government has recently taken out a loan facility from the Brics Bank of $1 billion. That's in addition to a $1 billion facility of last year. Joining us to discuss this is Jonathan Katzenellenbogen, who's a writer with the Daily Friend online newspaper. He's written a piece on this new loan and the implications for South Africa. Jonathan, welcome back to the CRA channel. Could you tell our viewers what is the details of this package? Are there any conditionalities attached to it?
Yes, David. So the Brics Bank, the New Development Bank, lent South Africa $1 billion 2 weeks ago. That's a substantial amount, and it's all really on concessional terms. It's at a rate of about 1.25%. It's it's for 25 years and has a 5-year grace period. And these are very generous terms. They're simply not available anywhere else. And last year, South Africa took out a 30-year loan from the Brics Bank at a similar very low interest rate with 5 years grace. These are very generous terms and are very helpful to South Africa, particularly at this moment. Both of them are COVID related. The first loan was a loan for personal protective equipment and so forth. And the second loan was, which we received 2 weeks ago, will mainly go to the presidential jobs program, which aims to create 800,000 jobs over the next 5 years. So that's general economic support. But what these loans are really about are for general government spending at a time of crisis. And as money is fungible, what they allow South Africa to do is to allocate, it frees up funds, government funds, to go into other programs, although there is a specific condition that they be attached to this.
Enjoying this analysis? Click here to sign up for our 30-day free trial for more content from the CIA.
So Jonathan, what about any conditionalities that are attached to this in terms of economic policy reform? Is there anything by way of reform attached to these loans?
Nothing, no macroeconomic policy conditions. Unlike the World Bank, the IMF, and the other multilateral finance institutions, indeed the Asian Development Bank and the African Development Bank, the Brics Bank doesn't impose policy conditions. However, I haven't seen the loan agreement. There are bound to be stipulations that, one, that the funds are in fact allocated to what the agreement stipulates and so forth, and there'll be other things. But the Brics Bank does not do macroeconomic policy conditions at all. Now, I should just mention that South Africa halted discussions with the World Bank for a $4.5 billion emergency type loan to get our economy over the COVID hump. And that apparently, reportedly, stipulated that South Africa would that there would be no pay rises for civil servants and that there would be no bailouts for state-owned corporations. So with the proceeds of that fund, and South Africa wouldn't agree to that. So we could have expanded the amount of concessional financing we got by a substantial amount with that. The IMF loan had very minimal conditionality. All we had to prove for such rapid financing loans that many other countries took out for COVID was that we cooperated with the IMF.
Okay, so these emergency facilities, that's quite different to the traditional structural adjustment programs that the IMF used to offer. So the conditionalities are lower. But where to from here, Jonathan? Where do you see this going in terms of South Africa's ongoing dependency on borrowing? Because the fundamental problems that have led us to this point have not changed. So how do you see this playing out?
Well, the loans help. Last year there were the concessional loans of this type, IMF, World Bank, IMF, the Brics Bank, and the African Development Bank. There was a very small loan from the African Development Bank as well. What they do, they're on such concessional terms, they are for very long durations, except the IMF loan is just for 5 years. But the Brics loans are for very long durations and very generous. And the thing is, what they do is they allow you to borrow at these very concessional terms over very long periods, thereby extending the maturity of your of the loans you have. And that's quite significant, particularly for South Africa. We are having to borrow increasingly at the shorter end of the market because borrowing at the high end, because of the risk of factors attached to South Africa, is becoming increasingly expensive. And last year, we borrowed something like 12% of our total borrowings. Most of the borrowings are domestic from the concessional sources. We didn't have to borrow abroad. This saved us from having to borrow abroad. And that's very lucky because conditions in world markets for us were terrible. But now what's happened is that South Africa has really run out of concessional sources of funding, or they don't like to call them concessional, but very low rate sources of funding with very few conditions. And this year, we'll have to resort to the international markets. And that brings a degree of market discipline to it, that you do have to, this sort of money has run out. And you've got to constrain your borrowing and adopt more sensible economic policies. This does put pressure on the country to reform. There's no doubt about it. With our high debt levels, there is incredible pressure on the country to reform if it wants to ensure lower interest rate levels. Debt service is one of the fastest growing components of the budget. And it's all a bit of a waste, really, where it's not going to salaries or infrastructure or education or hospitals. It's all going to much of it is going to bondholders. So there is pressure, but the government doesn't really seem to be responding to this pressure by taking reform very seriously.
So Jonathan, when a few years ago, Jim O'Neill coined the term of Brics, he considered it more of a kind of a category of countries, large countries with large populations, which were experiencing high growth or potential for high growth. But now we seem to have this economic institution that's been bolted onto it. What do you think is the current politics of the Brics and the kind of the background to this? How do you see Brics acting in the global arena at the moment?
There are very few strong political binds between the Brics country. After all, Brazil, India, and South Africa are electoral democracies, whereas Russia and China is not. They don't have elections, and Russia have elections, but their elections are somewhat suspect often. Therefore, there's not a strong idea that holds these countries together, really. What holds them together is to exercise an alternative pole in the world to the European powers and the US. But even then, why should they take a similar position on everything? There's an account, of course, in Obama's recent memoirs of how all the Brics followed China on an issue, literally unquestioningly, and then reversed their position when brought under pressure from the US. So there's little to bind them. But the idea of a Brics bank is a good one. It's mainly a project bank, mainly lending for projects. But in South Africa's case, it's lent to the dodgy state enterprises. which is concerning, and they wouldn't be able to borrow elsewhere at those sorts of rates and terms. There is concern that it might fall under absolute Chinese domination. And as time goes on, the BRICS countries, the BRICS shareholders, there are 5 of them, all the BRICS countries, all equal shareholders, but their shareholding position can be watered down should other members, and including outside members, make capital contributions. And who has the resources ready to make these capital contributions on a large scale? And it's China. So it's going to be interesting to see if China expands its shareholding. But currently, the bank has a investment grade rating, which none of the BRICS countries have. Therefore, it is able to borrow at a lower rate than any of the individual BRICS countries, and therefore pass those savings on to the BRICS countries who borrow from them. So the degree to which one has to be a Chinese political client at the moment is not great, but things could change over time.
Well, thanks very much, Jonathan. It's always good to have you on the CRA channel. If you enjoyed this analysis, do check out Jonathan's article on this topic on the Daily Friend newspaper. It's linked in the description below. Also, like this video and subscribe to the channel if you haven't done so already. My name is David Ansara. This is the Center for Risk Analysis. Until next time, take care.